something they don't do, right? Imagine how bad this problem is if they actually acknowledge it, because they're never going to acknowledge the true extent of it because they don't want to scare anybody, pointing out just how bad this is going to be. But it is. And so if the Fed is at least got an eye on the problem, they don't want to compound the problem by hiking rates. But, I also thought it was interesting just how much time Powell spent talking about how important it is to get inflation down and how little progress they've actually made in accomplishing that, how they've made some progress, but there's still a long way to go to getting where they want to be. He said that price stability is the bedrock of the economy. And we can't risk losing price stability. It's so important. It's so crucial to prosperity. Well, if that is the case, didn't Powell believe that 2 years ago, 3 years ago? If he really believed in the sanctity of price stability, how, it's so, important. You want to just, cherish it and protect it, and you don't want to risk losing it. Why was he so cavalier about it? Why did he leave interest rates so low for so long? Why did he dismiss the early warning signs of such an important thing if he was risking losing this bedrock of price stability? Why didn't he try to act preemptively? Why did Powell say several years ago that they were going to err on being too late rather than too early? That he was okay if inflation was higher because it was going to be very easy to bring it back down? What happened to all that? I guess Powell was wrong about all that, but he never admits it. He never acknowledges it. Nobody asks him any questions about that. I haven't seen any of the reporters ask some hard questions about, hey, why weren't you tough on inflation before it became a huge problem? Why did you have to wait to see the whites of the eyes to fire? Why didn't you do something preemptively? After all, that has been historically what central bankers have done. The adage, don't let the inflation genie out of the bottle. There's a reason for that. They just didn't come up with it because, there wasn't any experience with letting it out of the bottle. Every central banker knows how tough it is to get the inflation genie back in the bottle. Why didn't Powell know that? Especially if he knew how important price stability is, why didn't he raise rates sooner? Well, the reason was he was afraid of what it would do to the economy. He knew a few years ago how levered the economy was, how fragile it was, how addicted it was to cheap money. And so he was willing to risk inflation getting out of control rather than act preemptively to stop it and potentially cause all that damage in the economy and the banks. Well, it's the same situation today. We're in an even more vulnerable position. They've already hiked rates to 5%. We have a lot more debt now than we had a few years ago. We've already seen all these high-profile bank failures. If the Fed didn't realize before how vulnerable the banks were to higher rates, it sure as hell knows it now. If it didn't see the flip side to the mortgage refinance wave, if it didn't understand all the risks to the lenders of being on the hook for 30-year fixed rate mortgages with a 3 handle or a 2 handle, it sure as hell knows now. If it didn't see the risk of all the banks owning a bunch of 10, 20, 30-year treasuries with 1 or 2 handles, it sure as hell knows those risks now. So I think it's the same predicament. So the Fed is done hiking rates. It just doesn't want to say why, because it doesn't want to let that cat out of the bag. But this would be meeting with precedent, that once you stop that hike cycle, it's kind of hard to resume it, especially when the markets now are going to start to factor in the fact that some of these expected hikes are not going to materialize. Because what's more important is not what the Fed thinks might happen in the future, but what they actually do now. And even though they are somewhat promising future rate hikes, they may not deliver them. And I think the fact that they won't deliver is going to start to be built in to the markets. And then the Fed is not going to want to risk disappointing markets that are now preparing for no more rate hikes. Also, another thing that I thought was significant, but again, none of these people at these press conferences, ask this question, or I don't know if they even think about asking this question. But Powell talked about how many years it's likely to take to get inflation back down to 2%, which, at least that's an honest admission to an extent, because it's going to take a lot more years than he is, implying. But at least he is implying years. Maybe people think he means 2 or 3, right? But that's still a long time to have inflation well north of 2%, which really means that rates can't go down, especially when Powell talked about how in order to bring inflation down to 2%, we need positive real rates, which means interest rates have to stay above the rate of inflation. Well, that means we're not going to get a return to 0 or 1 or 2% rates, which is what the markets really need, which is what I think the stock market investors are betting on. The NASDAQ hit another 52-week high today, led higher by NVIDIA. That was up another 5%, now over $1 trillion market cap. Microsoft made a new high, based on the AI hype. The Dow was down about 250 points, and I think on a percentage basis, the Russell 2000 was down more. Gold also reacted negatively, but finished the day, I think, up a few bucks. It was up like 10 or 12 bucks before the hawkish pause. Then it sold off. As I'm looking at it now after hours, it's now down about $3-4, and now $7.50. So it's now down a little bit on the day. Bitcoin, for those of you who pay attention to fool's gold, is actually having a pretty bad night. It went below 25,000 about 2 hours ago. That was about $1,000 drop from where it was, around the time the U.S. stock market closed. As I'm doing this podcast live, it's 25,123. So not looking very good for the hodlers. But the markets are still priced for some type of return to cheap money. That, okay, now that the Fed has brought inflation back down, we can go back to these low rates that we've enjoyed for over a decade. That ain't happening. And the Fed is kind of admitting that by saying it's going to take years to get inflation back down to 2%. And in order to get inflation back down to 2%, we're going to have positive real interest rates, which means interest rates that are higher than inflation. And inflation year over year is still running 4 or 5%. And so that means interest rates have got to be 5% or so. And if inflation turns up, they got to be even higher than that. And again, positive real interest rates means interest rates that are higher than the actual rate of inflation, not the rate that the government pretends is the rate, but the real rate that bondholders or other lenders are going to have to deal with. And as more people come to terms with the reality that the official government numbers are too low and that actual inflation is quite a bit higher than what the numbers will admit to, well, then real interest rates also have to be a lot higher. And that is very problematic for the market. But what Powell is not being asked about, and I would love it, is if we're going to have inflation considerably above 2% for several years, what about the Fed's commitment to average inflation of 2%? Because it was just 2 years ago that Powell said that we just don't want to target 2%. We want to target average 2%. We want to make sure that inflation averages 2%. Now, of course, it was very convenient for the Fed to say that back then because inflation had been a little bit below 2%. And that's what initially gave the Fed the leeway to allow inflation to be above 2%, right? They said, well, we were at 1 3/4, 1.5. So that means we can go to 2 1/4, 2.5 to kind of make up for it. to average it all out so that it's 2%. Well, first of all, if price stability was so important, right, the bedrock of our economy, and inflation is so hard to control once it gets entrenched, why even risk that? Why didn't they immediately declare victory when inflation hit 2% and start hiking again? They knew the economy was addicted to the cheap money.